A very good afternoon and welcome to HYCM's webinar FX Week Ahead Live Market Analysis with myself, Giles Cochran. I hope everybody is doing well and looking forward to the session ahead. Just going to say hello to folks and give folks a moment to come in. As you're coming into the webinar, just going to go through the disclaimer. Don't forget that any entries, exits we talk about during this webinar is purely from an educational perspective. The whole idea of these webinars is you look at someone with a professional trading background and you see how they go about analysing the market, and you sort of pick up tips and tricks and educational content as you go. So just to be aware of that as we come into the session. And I think most people are in the session now, so we'll start now. Okay. As we come into the market, we're seeing risk sentiment is pretty mixed at the moment. Now, let's just take a big picture view. We have to, especially today, because we're coming into month end, and you tend to see some interesting flows around month end. So let me just run through this with you. The big news that's been really helping the market recently has been that Pfizer and BioNTech vaccine news that came in on November the 9th. We've had a series of other headlines which have just been really supporting equity markets. And if we just take a look here, if you just go over to the other screen, you can see here the S&P 500. If we just zoom back to November the 9th, you can see here that strong sentiment that came into the market November the 9th. We've just seen that finding support on the dips in the S&P 500. If we look at the S&P 500 futures market from the daily chart, you can see we're right up here at these highs. That was November the 9th on that positive vaccine news. Taking out those highs, we saw that trend line being broken to the upside. That was a real key tell, and price just moving back up to that level. So optimism is abounding in equity markets. If we just look at, the German DAX, you can see that's been repeated there. Price just breaking up above those highs. You can see that's important now. Strong moves higher in the DAX. See in Euro stocks, very similar as well. You can see these strong moves higher from November the 9th. Now, European markets have been doing a little bit better than other markets, and there's a reason for that. A lot of the European equity markets, you can see the indices: Greece, Spain, Austria, Italy, Belgium, France, all rising like above 20%. World index, like Greece, 29% recovery. Excellent news for the Greek index, whereas the S&P 500 only rising 11%. So a lot of the European sectors that have seen strength, energy sector, airlines, banking, those kind of cyclicals sectors have been supported into the end of November. So that's where we currently are. We're at the end of the month, seeing some very strong moves in equity markets, and we're just around those highs. Now, there's a general rule in the market: you don't want to be buying at the highs because the danger is you get caught out in moves that go against you. So what we are looking at this week as potentially good trades is the Australian US dollar longs. Now, here's something to look out for. This is coming to our first risk event of the week. If you just look at the calendar, you can see that we have a very, very quiet Monday. We have OPEC meetings going on. We'll cover that in a moment. And we also have the cash rate decision taking place overnight for the Reserve Bank of Australia. Now, let's look at the RBA. Now, the RBA have keeping cash rates now at 0.0%. The last cut from the RBA was very well signposted, and that cut from the RBA was suggested that the Governor Lowe said that he didn't expect RBA to go to negative interest rates, and they didn't see a point in interest rates going from 0.1%, which they currently are, down to 0.0%. So you see the current rate is 0.10%. There's no point in going to negative rates, and there's no point cutting by just 1 basis point. Now that means that the RBA is likely to be pretty optimistic heading into tonight's meeting, because since their last meeting, there's been sort of, vaccine optimism news. They're going to feel more upbeat. So I think that's the kind of end of the Reserve Bank of Australia of their cuts. So their monetary policy is appropriate. We're not expecting any more cuts from the RBA. The Australian dollar is a pro-cyclical currency. In other words, when the globe recovers, the Australian dollar recovers too. We're also seeing some dollar depreciation, which is very good for commodities. So commodities like iron ore, copper, Australia exports a lot of them. When you see a weak dollar supports commodities, because a lot of commodities are purchased in dollars. So if dollar's weaker, it means that commodity prices can move higher. So you're seeing at the moment, just take a look at copper prices. You see copper futures ripping higher, oil prices ripping higher as well on that weaker dollar. Gold being the exception at the moment, because that's got its own drivers. Potentially, if you want to find out about gold, please do ask me in the question and answer sessions. May get time to look at that before the end of the session. So with the Reserve Bank of Australia meeting tonight, the anticipation is that they could be more optimistic than the market is expecting. That dollar depreciation, I'll just show you, here's the dollar index. See the dollar index continuing to fall. The dollar itself has just broken out of a very key trend line. See that trend line there, just breaking to the downside. That downside break is important technically. So I would favor any sellers back to that 92 level. Now, there are some reasons for some dollar weakness coming into the year end. Let me just explain. Now, if you look here, what you can see is, let's just check this, you're seeing the right script. Yeah, what you can see here, this is a seasonal look at the dollar index. And what you see is in December, you tend to see the dollar index fall. And in January, you tend to see the dollar index rise. Now, those seasonals are backed up by fundamental reasons. US companies tend to move money to their daughter companies to save taxes. So you tend to see dollar outflows during the end of December. Get rid of dollars from your mother company, and that means you're going to pay less taxes. So everyone likes paying less taxes as a general rule. So there's important financial incentives for shifting dollars out. Those dollars then come back into the market in January. So if you just take a look at this from the more detailed version, this is December going down into the end of the year. Now, what you see is, what you see here is the dollar weakening. Now, if you took an annualized return of that, that's 10.58%, and the maximum loss is 6.43%, which happened around 2008. So remember, it wouldn't be a great surprise to see some dollar weakness this time. 2008 was obviously the global financial crisis. We saw lots of quantitative easing, which weakens the US dollar, and a very similar anticipation of weakened dollar was expected then, as is now. So seeing dollar weakness into the year end could well be expected. So some traders might think, well, they'll sell the dollar all month and they'll potentially look to benefit from this move. So the picture at the moment for the US dollar is weakness. If you just look at the chart here, you can see I've just got jotted down on the chart that the reflation trade for the US is good for global growth and it's weak for the dollar. Biden presidency also means that he's less likely to do the American first policies of President Trump. Good for the world, bad for the dollar. So many analysts are expecting further dollar weakness. We've also seen some of those fundamental reasons for dollar weakness. So what that all means is important for the Aussie US dollar upside. So there's important reasons for Aussie strength and US dollar weakness. So that means that any retracements back down to that 7,340 region could be considered suitable for going long. Similarly, any moves back down to that 0.7260 level could also be considered suitable for going long. So that's something definitely to be looking out for as we're going into the end of the year and going into the RBA rate decision overnight. One key area to be looking at for oil is the OPEC Plus meetings. Now we can see oil is just retesting this key trend line here on the 4-hour chart. Let's just jot that in. Right, you can see here. Now that retest of that trend line is coming on expectations that OPEC and OPEC Plus are going to extend their production cuts. I'll just give you a quick little preview here. I'm going to take a couple of screenshots for this and see if I can hand this out for you. I'm going to give you some analysis on the OPEC Plus meeting and what to be looking out for. Okay, so I'm just going to drop this into the handout box. So I'm just going to see if I can, yeah. Oh, I'm just going to, there we go. I'm just going to try and drag something over into the just one moment. I was going to do this so that I've got it. Okay, yeah, I'm just putting one in. So I've just shared on the screenshots. I just shared a screenshot on the handout. So if you look under handouts, there should be let's have a look. There should be another screenshot there. Okay, apologies for that. I've tried to share a couple of screenshots there, so I hope that helps. But what we're looking for here is this key OPEC Plus. Now the month meeting scheduled is 1 o'clock GMT, so that's starting in 15 minutes. And the key issue is, will they extend the production cuts? Now, some are suggesting somewhere between 3 months and to 6 months extension cut plan. So what we have to look out for is a buy the rumor, sell the fact response here on crude oil. You can see that oil has been rising very high, and it's been rising very high on the vaccine optimism and expectations of further oil strength coming. Now, we've seen this trend line finding some support, but if the production, here's what to look for, if the production cuts are agreed, then we could expect further upside potentially in oil, followed by potentially buy the rumor, sell the fact response. The market's been expecting these production cuts all the way since end of October. So when the market expectations have been running high for so long, at the event, all the people who are long close their position because there's no other reason to be long. Because if you've been buying oil in anticipation of OPEC Plus and their production cuts, then once the event happens, you buy the rumor and sell the fact. So watch out for a buy the rumor, sell the fact response in oil that's coming up with the OPEC meetings, and they start in 15 minutes. So be particularly aware of that if you're trading oil. Now, obviously, one area to watch is if the production cuts are scrapped and if OPEC decide that they're going to go back to full production in January, then oil prices will sell off quickly. So this trend line offers a potential area. So stay above, bulls are in control, get below, the bears are in control. That's the outlook that I have for oil. OPEC plus meetings coming up, that will be indicative. Broad strength has been for two reasons in oil: OPEC plus production cuts expected and global vaccine hopes. Now, another key commodity to be looking at, of course, we can't not mention it today, is gold. Now, gold sold off exactly the same time as equity markets started moving higher. Now, the reason for this is that if equity markets start moving again, and if global vaccine hopes spur global recovery, then the situation is not as bad as is feared. And so the safe haven appeal of gold can lose its value. This falling gold spot price has been matched by exchange traded fund outflows. Now, those exchange traded fund outflows have been pretty high, and they've been high over this year. That's been supporting gold prices. A lot of people have been very bullish on gold. These falls here now are pretty heavy. If you just look at the monthly chart, technically, look, you know, it's dropping down that level heavy. Could see some further heavy selling in gold. Now, the medium-term outlook for gold still does remain bullish. And the reason it still remains bullish, I just want to have a look at the 100 EMA here, actually. The reason it still remains bullish is because interest rates are very low. Because the Federal Reserve is still keeping interest rates very low, because there's large amounts of quantitative easing, medium term, we are expecting gold buyers, but not right now. So we need to wait. The next decent level of support is the 70-50 region. Now, I took a long on gold around the 1800 region. Let me show you. So I took a long on gold. I'll just explain my rationale. Here we go. All right, here we go. So when gold was supported around here, I thought I'll take a long here and I'll cover my shorts. I'll cover my longs with shorts if I get broken out. So I've covered my longs now. So I'm sort of, I'm flat and I'm gaining money as prices falling. I'm looking for the price to bounce. So where's the first place I might expect to bounce is around this 1750, but I'm showing you how I'm going to play this. Now, demand for gold tends to be very strong at the end of December. You look here. Over the last 10 years, gold tends to be very strong in January. Now, that strength picks up in December, right? January marks lots of gold buying from China. China is the largest gold purchaser of physical gold. India's the second. And you tend to see gold rising in January and in August. One rise for the Lunar New Year, one rise before Diwali. They're traditional gifts to be given in these countries. So these traditional gifts spur demand. Now, looking at the gold from December to February, if you look here, this is gold seasonality from the end of December through to February. It's gained 9 times out of 10, and you can see that those gains have been for the last 7 years in a row. So if you bought gold end of December, held it through to February, 9 years out of the last 10 you would have gained, and you have an annualized return of 34.91%. Fantastic. So gold is about to enter a very strong seasonal demand. Now you might say, well, will China still be purchasing gold? Yes, I think they will. And my rationale is that in October, the Golden Week holiday in China, people were traveling freely in China without the spread of COVID-19, and that was being well controlled. So the Chinese Lunar New Year holiday should be able to be enjoyed, but obviously it's a risk factor we need to be aware of. If the holiday is enjoyed, people are going to be buying traditional gifts, so gold purchasing should carry on. This seasonal demand should return. So this is what I'm looking for. I'm looking at holding my gold shorts for now, alongside my gold longs, then waiting to see how far gold falls before buying at the end of December. So I'm looking at purchasing around 23rd, 24th of December to try to benefit from that seasonal demand, which I've outlined here. So I hope that is helpful. I hope that gives you an indication of how to handle that gold market, as it's pretty tricky at the moment. But next term, near-term support is that 1750 region. So we may see some support from there, and obviously I'll be playing it by ear. After the RBA cash, we have US dollar. We have Fed Chair Powell testifying. Need to keep an eye on anything that Fed Chair Powell says. More easing is expected out of the Fed for their 16th of December meeting, so that's one to keep a careful eye on. Do take a look at my blog. I do have a very decent central bank watch, so make sure you go over to my blog, look at my central bank watch, and you can see here's my December, and that will give you an overview of what the central banks are doing. So do have a look at that. I'll just put that there into Silver asks, is Bitcoin long or short? Just looking at Bitcoin. Bitcoin remains about very bullish bias. There is a fundamental shift that's gone on for Bitcoin, but also Bitcoin is very elevated because at these all-time highs. So you just need to be aware of that for Bitcoin. If all-time highs are taken out, then it's it's off to the races. If these highs get taken out, the next stop is 2100. So if you're not long Bitcoin, what you could look for is look for a break of those highs, break of that level, and then a retest to move higher, or a deeper pullback around to 1400. But Bitcoin is a buy on the dips. I took a lovely Bitcoin, the best trade of this year for me, where I entered in at 10,850. Yeah, 10,850 here, and I took profit at just 1480. So I took a lovely chunk, about 10% of my account, which I'm building up for managed funds. That was fantastic. Great long on Bitcoin. Of course, should have held it for more, but 10% of the account, I'm pretty happy with that. So that's that's my take on Bitcoin. Going back to the calendar, a very light calendar. Got Governor Lowe speaking. That'll be interesting in light of what happens with the RBA rate decision. GDP out of Australia. Again, depends what the RBA says, the significance of that. So do check that meeting out on Tuesday. I'll have an update and put it on my blog. And Fed Chair Powell testifying on Wednesday. Very light day on Thursday. And then we've got employment data out of the US on Friday. As long as that stays pretty supported, not expecting any fireworks from there. And the main element is going to be the rising, there's going to be the risk tone through this week, how markets feeling in terms of global risk sentiment and the general market consensus and mood. Okay, folks, I hope that helps folks get ready for the week. Are there any questions that people have? Any questions? Just heading in towards the end of the year and a pretty quiet week coming up. So the main thing to be looking at for is those Aussie US dollar longs. You could also consider New Zealand US dollar longs for the same reason. New Zealand US dollar longs from this current market from 0.7022 today, you'd expect a little bounce higher. So any drop down to that could be considered suitable for longs as well as deeper drops down to that 0.6940 region. Okay, folks, hope that helps and just gives folks a little bit of an understanding. Main risks to these kind of trades is if we have sudden selling off in equity markets, bad news, rising COVID-19 cases, anything like that would invalidate the outlook. Okay, folks, everybody take care. Have a great week. Don't forget, come back here on Wednesday if you're an HYCM client, and I'll go into a currency pair in detail and show you how to find a currency pair to trade, each day, each week. Okay, thanks everyone now. Take care. Have a really good week. Goodbye.